From the newsroom of Impact Alpha, I'm Brian Walsh, and this is your Impact Briefing for Friday, July 21st. On today's show, David Bank has another conversation in our series from the Connecting Capital to Communities gathering. He'll chat with Nisa Banda of Acre Africa, which helps arrange crop insurance against climate risk for farmers in Africa. But first, here's what you need to know from This Week in Impact Investing. What's up with Larry Fink? First, the BlackRock chief acknowledged he has backed off the term ESG. This week, he dismayed climate advocates by naming the head of Saudi oil giant Aramco to BlackRock's board of directors. According to NYU's Allison Taylor, peak Larry Fink occurred in January 2020 when the BlackRock CEO was an urgent voice for climate action and corporate purpose. And she says his stock has declined since then. With their contribution to educational opportunity and economic mobility, historically black colleges and universities, or HBCUs, may represent the ultimate social impact investment. But instead of enjoying a social benefit premium, many of the educational institutions instead pay what experts call a black tax. To kick off Impact Alpha's partnership with Sherelle Dorsey, founder of The Plug, we'll explore how investors, employers, and policymakers are unlocking social returns through investments in HBCUs. Join Sherelle and David Bank next Wednesday on LinkedIn Live. You can sign up on impactalpha.com. Some impact investors are sharing power as well as capital. Participatory investing, sometimes called grassroots community engaged investing, was pioneered by a handful of nonprofit funds, including Ujimi Project in Boston and the East Bay Permanent Real Estate Cooperative Fund in Oakland. Common Future and the Miriam Asafa Fund of World Education Services have released an online toolkit to help larger foundations adopt participatory practices. Striking actors in Hollywood are just the most visible sign of a resurgent labor movement. Worker power has proved remarkably durable. In such an environment, employer strategies for quality, sustainable jobs are generating higher profits for companies and increased value for employees. NYU's Ulrich Atz and Tansi Whalen explain how in a guest post for Impact Alpha. Speaking of workers at Anchor Brewing Company in San Francisco have told Sapporo USA they want to buy the maker of Anchor Steam beer and run it as a worker co-op. San Franciscans have flocked to the 152-year-old brewery since Anchor's owners announced plans this month to shut it down. And now it's time for this week's featured conversation, the next in our series from the Salzburg Global Seminar, sponsored by the Robert Wood Johnson Foundation. David Bank sat down with Nisa Banda of Acre Africa, which organizes crop and climate insurance for smallholder farmers in Zambia, Malawi, and Zimbabwe. Let's jump right in.
Nisa Banda, welcome to the podcast.
Thank you, David.
You are with Acre in Lusaka, Zambia. Acre is agriculture and climate
Risk enterprise.
Risk enterprise.
Yes.
Just explain what you do.
Okay. So Acre Africa, like you've rightfully alluded, agriculture and climate risk enterprise is a risk management solutions company. So we basically started off as a project providing insurance solutions for smallholder farmers. But over the years, we've understood that farmers can access insurance, but they also need to access a holistic approach to how to take care of their produce. So some of the things that Acre does is train farmers, or rather provide advisory services in terms of farmers having good agricultural practices. And in addition to that, practicing of whether it's conservation agriculture or regenerative agriculture, they also access insurance services that protect their yield in case of a bad season.
And a bad season could be a drought or flood.
So just to explain, just to explain a little more on how our products work. So we have developed what we call climate risk products, which are parametric insurance products. So we have what you call weather index insurance, soil moisture index insurance, area yield index insurance. And just to explain a bit more, what that means is whenever there's a deficit in a particular parameter, then a farmer then receives a payout. So what happens is we have an understanding of crop phenology, of how much a crop needs to be considered a healthy plant in a particular season. And when there's a deficit of that water, then a trigger is set off, so to speak, and a payout is then declared to a smallholder farmer.
And parametric, that's what parametric means.
Yeah, so basically parametric insurance is assigning a particular parameter to the insurance that is what the payout, or rather the risk basis, is based off of. So in this case for us, weather is what we focus on. Rainfall in particular is what we focus on. You can set parameters such as temperature, humidity, but our focus for us is rain. So we started off with weather index insurance, which is basically measuring how much rainfall falls in a particular area at a particular time, and how much of it is actually nourishing the plant up to from germination to harvest time. However, we realized that just focusing on the amount of rainfall is not very effective. So what we then use is now an advanced version of weather index, if you may, called soil moisture index. So now we are measuring, rather using satellites, we are measuring how much moisture is in the soil at a given time to allow for crop growth and maturity.
And just so that folks understand, the advantage of parametric is that it's triggered, as you say, by some indicator that's general. Not every farmer has to say, oh, I lost my crop, and then file a claim and wait for an adjuster to come and confirm it. And so it saves a lot of time on your side, and presumably gets the farmer their payouts quicker as well.
I think just to bring a bit of context to it, I think the purpose of us developing these products, I think, is based off of financial inclusion. I think historically, a lot of people, especially in marginalized communities, have been excluded from most financial products. You see it in the banking sector, you see it in various sectors where they don't have access to what is considered the basics for someone who lives in a city. So with that in mind, there's also the aspect of insurance penetration in Africa, Zambia to be specific, is just at 3%. So there's a big push around how do we get more people to subscribe to insurance products, which is now where we come in with our development of microinsurance products. So these policies are issued at group level. So we don't insure individual farmers. We'll insure farmers in aggregated groups. So this could be cooperatives. This could be farmer groups. These are farmers who could be being supported by the government. These could be farmers through microfinance institutions who are accessing some sort of agriculture inputs loan. So the law of large numbers basically makes it an affordable insurance for many people to access at one go.
Now, I would imagine that if the drought hits, it hits everybody, and then the payout goes to everybody. That's a tough situation for the insurance company. So how do you sort of underwrite the risks?
So to keep the insurance affordable, again, we're doing group insurance. And when the payouts are triggered, it's also at group level. So we monitor the insurance in unit areas. So I think, as mentioned earlier, there's no physical inspections, both at underwriting stage and at claims stage. So this allows for us to also just lower the administrative costs around it and keep it affordable. So what happens is, in a particular area, if you say you have 100 farmers, so for us a unit area is around 100 by 100 meters. So all the people in that area that we're monitoring using the satellite, we try to be as granular as possible. I think before it was like 20 kilometers by 20 kilometers, which was quite big. But I think over the years we've realized that there are a lot of microclimates existing in our countries, and it's important to have smaller units for us to monitor. So like in the Zambia context, we have what you call a camp. So that's like the smallest unit, geographical unit that you're able to monitor. So if you have, say, insuring farmers, say in Zambezi district, within Zambezi there are smaller units. And when a payout is triggered, everyone in that district will receive the same level of payout. So obviously this will be tied to how much of a loan you took out or what the value of the inputs that you took in where. So obviously their loan amounts may vary depending on the program that this insurance has been deployed on. If their loan amounts, to say, okay, so in this area, the trigger was around 30%, meaning everybody in that area gets a 30% of their sum insured. So those are sort of the downsides, if you may, that it's not particularly customized to you as an individual, but it's customized to your geographical location.
So you as an individual might get a payout and you didn't lose all of your crop, and somebody else doesn't get a payout and they lost more.
Yes, so that's where we.
And that's when they probably call you and complain.
Yes, so you do find that we have what we call basis risk. So basis risk is basically someone, whether there's a mismatch between what the satellites are reporting to us and what is actually happening on the ground. And there are many reasons why basis risk will happen. It could be the type of soil that the farmer is using or that the farmer has planted in. It could be just how they're conducting their farming activities, which also takes us back to why it's important for us to sort of holistically also train them in good agricultural practices.
If they have some kind of more nutrition in their soil, it retains the water better, and then that sort of thing.
Because you will find literally within a few meters of each other, one person had a good year, the other one didn't. So there are a lot of other factors that may be involved, but all things equal, you will find that the reason why you will find there's a difference is mostly tied maybe to agricultural practices. But if all things equal, yes, you still will find the microclimates existing within a few kilometers of each other, which can result in some farmers receiving payouts even when they didn't need payouts, and then others who needed to receive payouts not receiving enough or not receiving at all. So for us, I think what has been very cardinal is constant improvement. So every year we do validations, we go on the ground, okay, did this thing work? Did people receive payouts when they were supposed to receive payouts? There's a lot of engagement with the local government offices just to get feedback. So like now, we sent out reports for the last season. So we do it in levels. So before we even share with the underwriter, the insurance company, we'll share it with the underwriter, and then the underwriter will share it with the ministry before payouts are given a go-ahead, basically. So the insurance company shares it with the client. So let's take, for instance, the bank or the Ministry of Agriculture. The Ministry of Agriculture then sends these reports to the various locations around the country. And these people now have the job to validate, say, is what this report saying aligned with what people on the ground are reporting has happened to them this season? So that feedback helps us now know where the pain points are, where do we need to go and do actual physical inspections.
I imagine with climate change, the payouts may be getting more frequent, or the crop failures are more frequent. What are you seeing with the change in climate?
Yes, so they are getting more frequent, though we have noticed a bit of a pattern, if you may. So it sort of helps with planning, that it's not every year that the same areas will be hit as badly as they may have been the past years. That sort of helps us also manage our portfolio better. So for us, the idea is in, first of all, having a diverse portfolio for the benefit of the insurer, obviously, who's paying out the claims. And so we do have claims every so often, but we have noticed that the worst hits are usually every third or fourth year. So that also sort of brings comfort to the insurer. But in addition to that, them also having a lot of support from a lot of international reinsurance companies also helps cushion their risk. So you find that most local insurers will retain 5% and they reinsure 95%. So the likes of Swiss Re, Munich Re, Hannover Re, those are international reinsurance companies who are taking on the risk and sort of cushioning.
And those people know the data very well. That's their whole business.
Yes. So even when you develop a product, you have to run it by them first before you roll it out, because they need to approve and say, yes, we can pay reinsurance for this kind of product and the parameters that you've set for it. So yes, we do work very closely with them.
And you have all those big international reinsurers in the market for crop insurance for small farmers in Zambia?
Yes. So we are working with a lot of international reinsurers on the panel of the insurers that we work with locally, yes.
And they're all staying in the market. In California, for example, a lot of property, homeowner insurance companies are pulling out because of wildfires.
Yeah, I heard about that, yeah.
But in Zambia, the insurers are staying in the market?
Yeah, I mean, I think there's also the aspect of, I think there's a lot of support around trying to make this work, trying to mitigate the risks of the smallholder farmers. I remember interviewing with a certain company that wanted me to be the microinsurance manager. And their perspective was, so why should we go into this line of business? It sounds like CSR, corporate social responsibility. because like we'll be paying out claims every year. And for me, that was already a put off. I turned down the offer because I felt like they didn't have, I guess, the heart to sort of have a balanced portfolio. I feel like there's the aspect where you make money, but there's also the aspect of where you're also just doing a humanitarian service to the smallholder farmers, being inclusive. I think there will come a time when we will be able to charge the right price for the insurance, but right now we need to build traction and build trust in what insurance is. Remember, there's 3% penetration in Africa, so I think we're all just trying to bridge that gap and see how we can make insurance work for the Africa continent.
Well, if there's 3% penetration for somebody, it's going to be a big business if you get this right.
Yes, yes. So perhaps that's where they're looking at it from as well. That's why they participate. Most the US is obviously a very mature insurance market, right? So there's like options.
Yes.
Yeah.
And describe a payout. It's a ceremonial kind of moment, or an event, sort of
Depending on the value, we will throw a whole event.
A community event of some sort. Yes.
Sometimes we will do that. I do remember one that we had in 2019, just before COVID. So in that year, we were working with an MNO. So this is a mobile network operator. So we were using them, first of all, to collect premium from smallholder farmers. And they gave out SIM cards to all the smallholder farmers for free. There were about 7,800 farmers in that area. So it enabled the farmers to pay and then also receive their payouts. So it was pretty exciting because at the end of the season, a lot of farmers had received some decent payouts. So we asked them to all gather together, or rather as many as we could get together in one area. And basically using, digital solutions, they were able to receive their money on their mobile phones. It was just very exciting to see them, lament about how they had a drought that year and they received the payout that they were not even sure if they would receive. Because again, basis risks sometimes will result in that happening. And yeah, it's just very exciting to be able to see farmers lighten up and realize that insurance can actually be a solution to mitigate some of the issues that they go through. So it's a
kind of a relief. They would have faced a kind of hunger season,
yes,
and now they may be able to get through till the next planting.
So you have them tell you stories like, oh yeah, I can use this money to say plant some vegetables. Vegetables they mature a bit earlier, and they can actually just plant them in their garden and sell them and generate some income. Others will just go and buy inputs ahead of time for the next season. So there are different ways that they use this money, which is always very encouraging. I always say that my favorite part of my job is actually going into the field and speaking to farmers about their perception or their experiences with insurance. Because you actually get to see that in as much as it may not be of a great magnitude, it actually does make a difference for most of them.
Making a difference for smallholder farmers in Africa. Nisa Banda, thank you very much for joining us.
Thank you, David. I'm glad that you invited me to this, and all the best.
It's a pleasure.
Thank you.
And that's going to do it for this week's Impact Briefing. Thanks so much to Nisa, David, and our producer extraordinaire, Isaac Silk. Sign up for Impact Alpha Open, our free weekly newsletter, directly at impactalpha.com, or become a subscriber to get full access to our award-winning daily coverage in impact investing and sustainable finance. Go to impactalpha.com/subscribe. I'm Brian Walsh. Be sure to check back for next week's briefing. Until then, take good care.